Hi guys, welcome to this Money Control live stream. You're tuned into IPO Watch and I'm Nandita Khemka. Well, today we'll be focusing on the IPO of Le Travel News that operates travel platform Ixigo. The IPO has kicked off for subscription. The online travel agency has raised over 330 crore rupees via anchor investors. Now, the 740 crore rupee IPO is a combination of a fresh issue worth 120 crore rupees and an offer for sale to the tune of 620 crore rupees. Now, under the OFS, PE players like Safe Partners, Peak 15, among others, are selling shares. Now, we are joined by the management to talk about the company's growth plans, financials, etc. Alok Bajpai, who's the chairman, MD and group CEO, and Rajneesh Kumar, who's the director and group co-CEO, is joining us on this episode of IPO Watch. Great to have you on the show, gentlemen. I mean, I just mentioned that you guys have raised over 330 crore rupees via the anchor book. Some marquee global names and local names as well feature on the list. Let me just recap as to who all have invested. Nomura, Morgan Stanley, Government of Singapore, White Oak Capital, HDFC Mutual Fund, Motilal Oswal Mutual Fund are among the domestic institutions as well who've shown interest. But let me ask you first and foremost, how confident are you of the IPO sailing through, given the fact that in the last 1 week we've seen that the market conditions have been extremely volatile?
Hi, thank you for having us on the show. I think, if you look at the travel market, right, and of course, it's more apparent post-pandemic, but in general, in India, travel has always grown faster than GDP. And if you look at the size of the market, we are talking about an opportunity which is more than 5 lakh crores, of travel being sold in a few years from now, right? And more than half of that is going to get sold online. Now, given that market sentiment for travel has been very buoyant, you will see that in our numbers as well, it's translated into fantastic growth on both top line and bottom line, right? We've grown 350% from FY20 to FY23 on the top line, and our bottom line has also expanded in the last couple of years. So we are fully confident that our IPO will not just sail through, but it will essentially reflect the sentiment that the market has with respect to the travel industry, and of course the fact that we are playing in a very underpenetrated part of this market because we are focusing on the next billion users, the tier 2, 3 travelers, as well as people who travel on trains and buses and not just on flights and hotels.
Right, before I talk about your growth plans and expansion plans, let me pose a question to you, Rajneesh. Now, promoters have also sold shares worth 176 crore rupees in the pre-IPO round, right? What does the shareholding pattern look like now? And going forward, could there be further stake sale from your PE giants?
So, let me answer the first part of your question. So, post the offer for sale, the key management, including us, would be roughly about in the 16% range. However, what we need to really understand here is that, and I think I'd like to draw an analogy, like we've all seen our favorite cricket stars, walking up to the ground, to the pitch. And we see them, when they walk to the pitch, you'll see them kind of flexing, jumping, warming up, exercising a little bit before they start their big innings. So the last 17 years, I would say, we can compare that to that warming up, right? I mean, so we are just getting started and we are about to start an innings and we are ready to play in the big league now. So the story is mostly ahead of us, and that's the way we look at it. Because, the last 17 years is the hard work that we did was to identify an underpenetrated market, which is the next billion users. And that's the uniqueness of our story as well. And the way we solved that problem of the next billion users was to, be extremely customer-centric and have our ears to the ground and listen to their problems and, solve those problems using technology and AI and not by throwing people at problem. And that has kind of, given us those rewards in the form of this large user base that we have. We can boast of almost 429 million annual active users, making us the largest, travel property in India. And, the story of monetization has just begun. As we have seen, we became an OTA very late, like 2017 on trains, and then later for flights and buses. And we have just entered into hotels December last year. So All I can tell you is that the potential of monetization from this extremely large user base that we have, which is extremely sticky as well. We have 86% repeat user rate, and we have 90% users that we acquire completely organically. And that strength of ours is what we are betting on to kind of, grow this business from here.
Right, Rajesh, we'll be waiting for all those half centuries and centuries, and we'll also, of course, be talking about your revenue run rate going forward. But let me first ask you, you guys have outlined what, the funds will be used for that you're raising from the fresh issue, right? But any inorganic growth opportunities on the pipeline? When I say inorganic growth opportunities, I mean any acquisitions on the anvil just yet?
So I'll take that one. I think the way we look at acquisitions or investments is pretty unique. I mean, if you look at the last two acquisitions we did, Confirm Ticket and Abhibus, they were fairly synergistic to our strategy of building the best customer experience for next billion users. So Confirm Ticket was one of the leading train ticketing apps, which was quite complementary in user base to ours, and Abhibus was a bus ticketing app, second biggest bus OTA in India. And these acquisitions are now fully integrated, and these companies were not losing money. They were profitable or near break even. They were growing fast. They were frugal. The founders had spent several years building these businesses, and we'd been tracking them over several years as well. And the best part was that they had the same DNA of not throwing people at problems, but actually trying to solve them with technology, which Rajneesh was talking about. So I think those are the kind of companies that we evaluate time to time to see if there's anything interesting. We do not have any identified acquisition at this point. And, again, out of the use of funds, out of the GCP portion, a certain part of it can be used for any future acquisitions that we may come across, but not anything at this point.
Right, you mentioned about your hotels business, right? You've recently introduced it in December, but you have low exposure to both flights and hotels, right? Which are high margin businesses, by the way. But give us some business color as to how your hotel business is shaping up, and what kind of revenue contribution do you expect over the next couple of years from here?
So, like we said, hotels is very, very recent. We just launched in December. The way I would put this is that this is the phase where we learn about this product. This is where we learn about how this product will shape out for us, and what are the customer problems of people facing that people are facing in this particular sector, which is accommodation. And because of we have a very lopsided user base, which is more towards the next billion users, and the problems of people living in tier 2, 3 cities when it comes to accommodation would be very different from what it is of people living in tier 1 cities as well. So I would say we are still learning, and the playbook would remain exactly the same because, boring is good. That's what we have been doing, which is to become the most customer-centric travel company by solving the user customer pain areas and creating the best customer experience. Now, that's what we did on trains. That's what we have started doing on flights and buses, and that's exactly what we'll do on hotels as well. Having said that, like we said, trains, we've had a head start because, we started solving those problems much earlier, then became transactional by partnering with IRCTC in 2017 and started selling tickets. So we do have a head start. We have a very, very healthy market share, 52.6% last FY. But if you would see that our market share on flights has also been growing in a healthy manner on bus as well. And that's exactly because of the same reason. So the playbook that we're using is that a lot of these flight users, they are first-time flyers, right? As you know, India is a country where, only 4% people fly. So, and we know that most of those next flyers would come from tier 3, 4 cities. We've all seen that, we all started our journey. When we used to go to college, we used to travel in trains until we had the income that could, allow us to afford a flight, right? And so most of our train users will, some of them are evolving into flight users as well. And that's where we are seeing the biggest growth. And that's the reason why flights has been growing. And I think this is the exact same playbook, having like this large base of active users, engaged users, sticky users, solving their problems with respect to each of these products. and then kind of, graduating them, transitioning them to using our products, and hence the monetization story playing out.
In terms
And
of, right,
just
please go
to
on.
add, just to add to what Rajneesh said, if you look at our flight GTV growth, 9 months, we've grown at more than 80%, whereas the overall flight market, for OTAs actually grew at 20 something percent. So we've grown much, much faster than the market because of the playbook that Rajneesh described, which is as airports come in tier 2, 3 towns like Ayodhya, Jharsuguda, Darbhanga, and many others, Bareilly, for instance, the moment these airports open up, we have a large base of active users who would otherwise be booking a train or bus, but whom we are able to target and get into the flight funnel. And I think that unique distribution mode that we've built will allow us also for categories like hotels to expand in a unique fashion.
When you talk about market share, any target in your mind over the next 2 to 3 years? Of course, you said that you are growing way ahead of the industry growth, right? So, any ballpark figure in your mind?
See, I would say that, look, what we've done in the past is a good indicator of what we are able to do, right? If you look at even categories like trains, where we are the market leaders, right? We've grown from 46% of the OTA market to 52.6% of the overall OTA market in 9 months FY24. If you look at buses, where we are the number 2 player, and it's largely a duopoly kind of a situation there, we've grown from 11.5% to 12.99%, close to 13% market share. And on flight, like I mentioned, even though the base is small, the growth has been staggering. 3.3% market share has grown to 5.3. So I think the advantage that we have is largely our ability to target our existing user base of more than 77 million monthly active users, and bring more transactions on the table, and also go deeper and deeper into tier 2, 3, 4 towns in India, where we have a much larger presence than any other OTA out there.
Let's also talk about your financial performance, right? If you look at 9-month FY24, you've seen a steep jump in your profit. But I was just going through the revenue figures as well. That hasn't really happened in terms of revenue growth. Can you elaborate on the key reasons behind that?
So actually, you have to look at it the other way, right? We are a business whose operating leverage has only started playing out in the last 3 years, right? Like if you rewind 5 years, right? We were not even an OTA on most of the categories that we operate on. We were just a utility app on trains and a meta search app on flights, as well as, we had not entered buses yet. We hadn't entered hotels yet. What you're seeing play out is 2 things. One, our ability to now push more and more, transactions, because we've built the relationship of trust with our users in those early years. 1 decade of hard work starting to pay off in terms of the trust that we built into transactions, which cement the relationship with the user further. Secondly, we are able to monetize from additional ancillary products. We have value-added services like Ixigo Assured and Ixigo Assured Flex, and cumulatively, all the value-added services we sell are now sold on 31% of the transactions, which has been growing year on year, which is leading to more monetization. And the third thing is our ability to keep our fixed cost and contribution margin, giving us operating leverage. So if you look at our contribution margin, it has grown in percentage terms year on year. Even in the most recent 9 months period, it further grew from FY23. So as long as we can drive that operating leverage by keeping our cost inflation lower than our revenue inflation, that's expanding our margins. As you saw, 8.8% plus adjusted EBITDA margin in FY23 itself.
Right. And what about total borrowing? That has also gone up in the period between March 31st to December 31st, 2023. Give us some color on what led to this surge.
This is largely working capital type borrowing, like it's short-term borrowing. This is not long-term borrowing. We don't have any long-term debt on our balance sheet. So as our business expands, because of a couple of reasons, one is that as we run more bank offers on our flights business, where the recoveries happen, a couple of months later from banks, and also as we expand our Ixigo Assured business, where we actually give the money back instantly to the customer without waiting for it to come back from the airline or the partner the next day. In those categories, we are taking a little bit of a working capital expansion, but it's for the benefit of the customer, and therefore we are never shy of doing what's right for the customer.
All right, just a couple of more questions, gentlemen. Let me come to you, Rajneesh. Advertising and sales promotion expenses, that accounts for somewhere around 24% of total revenue as of December 2023. And given the swift rise in ad spends over the years, how do you plan to balance out these expenses with revenue growth?
So, I mean, it might look like, this expense has been growing, but if you go back to COVID, that was the time when, nobody was spending, right, at all, obviously, because, you know, transactional revenue had come to a grind and people were kind of conserving cash, etc. So there is this bias of this growth looking very high on the marketing spend side. Having said that, we're still very conservative on that side. We have been very, very judicious to not be overspending on that side. If you look at marketing, but at the same time, the strategy is not to compromise growth, which means that, if you think about most of our brand building has been organic. And I think we all know about all the viral videos that you would have seen across the internet over the last few years. And that has helped us build our brand in a very frugal way. But having said that, we'll not shy away from spending on brand going forward. But the most important thing here to understand is that the operating leverage in the business that has started to play out has allowed us to kind of start spending a little bit on the brand side as well. However, if you look at the overall spend on marketing, if I combine brand performance and even discounting and look at as a share or the percentage of GTV, you will see that we are not among the top spenders in the industry, right? And hence, this trend is pretty much in line with is what I would say.
Right. You earn somewhere around 47% or a sizable amount of revenue from train bookings, which are dependent on agreements with IRCTC. When does the contract come up for renewal, and any contingency plans in place in case the contract is terminated, hypothetically?
Yeah, so see, you have to understand that we have a synergistic partnership with IRCTC. I mean, if you look at IRCTC's relationship with OTAs, it's governed by a policy. This policy is uniform for all OTAs. It's a B2C distribution policy. Essentially, OTAs help them, reach every nook and cranny of the country and bring transacting train users. And also, given the fact that this is a win-win partnership for both parties in terms of how the parties monetize, I think it kind of makes sense for both to continue doing this more intensively. Our current contract, we've renewed it till FY28, and I think we in the past, we've always renewed it just like all other OTAs out there. So I think the bigger picture one has to think about is that there's a real opportunity for IRCTC and Ixigo to partner more deeply in various aspects of growing train ticketing and also train ancillary in the country, given that we have our own unique strengths in terms of the kind of users, the kind of penetration, and the kind of frequency with which we are able to drive transactions through the two brands that we run, Confirmed Ticket as well as Ixigo Trains, which today contribute the lion's share of OTA bookings for IRCTC.
Right. Lastly, any message to potential shareholders as to what sets you apart from competitors, your listed competitors like Yatra and EasyTrip, I beg your pardon, and why they should be investing in your IPO?
Yeah, so I think the biggest differentiator is that, look, we are building an OTA for Bharat. We are building an OTA for the common man of India. We are building something that every Indian can use and be proud of, right? And I think we are not just thinking transactions here. We are worried about every customer experience pain point, right? From trip planning to booking to managing your trip. And therefore thinking more holistically about customer experience. And I think that's what has brought us all the way here.
And like I said, we've just arrived at the pitch and we're taking these. So the innings is ahead of us.
Interesting that you speak about this cricket analogy, given the fact that we had this sensational victory against Pakistan in the T20 World Cup yesterday. But Alok, Rajneesh, on that note, I would like to thank you guys for taking out time and joining in. Wish you guys all the best with your IPO and the subsequent listing of Ixigo.
Thank you.
Thank you so much.
Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in. But you guys stay tuned to Moneycontrol for all your other news and updates.